Sweet. I think we're on. All right. Welcome, Amanda. How are you?
I'm very well, thanks you, David. And you? You're looking bright and cheerful today.
Yes, I am. It's Thursday. I've been really enjoying these series. This is episode 3, so I'm really excited to have you on today. So it's awesome. But as always, we're going to have some people jump on. So welcome. If you're on the replay, then please comment replay. We're going to have some people starting to join us live as we go. So as always, we'll just wait for maybe around about the minute mark, and then we'll kick off the video series, and then we can get into today. So we're going to be talking everything about cash flow today, guys. So this is going to be a real great resource for everybody, and I think it's quite a timely product and timely subject too.
It's always a timely subject, but even more so now.
Isn't it? Yes, I couldn't agree with you more, Amanda. I couldn't agree with you more. All right. So what I'm going to do is I'm just going to set off the start of this, and then we'll get into it. Hey guys, welcome everybody to the Business Reinvention series. My name's Dave, and I'm joined today by Amanda Fisher, who's also known as the Cash Flow Queen, author of Unscramble Your Numbers. And she's here today to talk about all things cash flow related. And we were just talking before that this is such a timely subject at any time to get good at your cash flow, but even more so now. So welcome, Amanda, to the broadcast.
Thank you. Thank you for having me, David.
Awesome. Oh, so pleased. Such a pleasure to have you here. And I think this is going to be a real great subject to talk through. I think right now, whether you're running a small business or whether you're just maybe an individual who wants to get on top of the cash flow at this time, what's the best strategies, what support's out there? But I think what we're going to be talking about is not just what's happening right now, it's actually what's going to be happening when COVID-19 is over, because this thing will pass at some point. And cash flow is not really important now, but it's actually important to think about what's happening in the future too. What is your continuity plan? What is your reset plan? And I think we're really going to learn some great useful strategies from you. So I'm really, as I said, it's a pleasure to have you here, and thanks for sharing all your wisdom with everyone. I thought we'd maybe start is just finding a little bit more about you. And if you get asked the question, tell me, what do you do? How do you explain what you do?
I try very hard not to say I'm an accountant. Oh, is that some funny feedback on mine? Hopefully not. I try very hard to say I'm not an accountant because people then kind of turn off and go, oh, boring. So I tend to introduce myself slightly differently in some way, find a different way to do that. But yes, I'm a chartered accountant by background. I will confess to that. But I'm an author and an educator primarily. I do some virtual CFO work as well. And my main thing is helping and educating business owners around numbers generally, cash flow specifically, but numbers generally. But at the moment, cash flow is such a vital issue and challenge for so many people, as you say, not just in business, which is where I spend most of my time, but also from a personal perspective as well. It's it's not just the income that's in the business that's a struggle now, it's income at home that's a struggle as well.
Yeah, and interesting, why specifically you can term cash flow? Why does this seem to, you speak so passionately about it, and how you speak with quite a level of importance? Why choose this as an area that you language around?
Oh, you know what? For many, many years, I resisted it. I help with the numbers. I educate on numbers. I'm all about the numbers, seeing through the numbers, the name of my podcast. But I'm all about numbers. And somewhere quite a few years ago, someone said, oh, you're the cash flow queen. I went, no, I'm so much more than just cash flow. But what I've realized over time is, while I am so much more than that, and I do teach a lot more than that, it's the fundamental piece of knowledge that sort of, I actually say there are probably 2 or 3 things that business owners need to know now. But one of the big ones, the biggest one of them, is the cash flow. And whether your business is going well, whether your business is in startup, has been in business for 25 years, whether it's growing, whether it's stagnating, whatever state it's in, cash flow is still really, really important. Not to take away from profit, because you do need to be making a profit as well. So, yeah, do go hand in hand. Yeah. But so I eventually went, you know what? Cash flow queen, okay, I'll take it. I'll put the crown on my head and I'll call myself the cash flow queen, and off we go. And it's just been really interesting since then, because it's where people come to me for, that's the kind of the starting point, and then we kind of go out and branch out into much more than that, in terms of everything else I do. But we need to get the cash flow right first in order to do everything else.
Yes, absolutely, and it's quite time progress. I'm really looking forward to getting into why it's really important to get on top of our numbers right now, and what's maybe some of the first steps we look at. But before we do that, I'd kind of like to again shout out to a number of people who probably think that cash flow, this could be quite an important topic, an important subject. So if you're here live or you're on the replay, and you know someone that would actually need to hear this message, and need to hear what Amanda's actually saying, then you know what, spread the love. Like, tag, share, get this message out to as many people, because I think it's really important now more than ever that we get on top of obviously our cash flow and get our numbers right. And also, as we go through the broadcast itself, if you have any questions or comments, any feedback, then please put them in. There is a great time to find out, maybe particular in your situation, maybe there's something that we can do to shift the needle and get on top of your cash flow a bit better right now. So I guess to put it to you, why is it important to get on top of your cash flow right now, and what are some of the things that we can look at immediately?
Yes, I think, well, one of the things now is that it's kind of like, I feel that we have a kind of a divide, both business and personal, between what I call the haves and the have-nots. Those that have a business that's still operating in some form, and those who have not, in the sense that they've been forced to shut down and stand down staff and deal with it. And it doesn't matter which one you are, knowing what's coming up in your future for your cash flow is key to giving you some stability, giving you some confidence about where you're going, giving you some information on some clarity on what it is. Because one of the things we've got multiple, 2 major initiatives from the federal government. We've got state funding grant initiatives as well, each one with different requirements and different timeframes. So, for example, the JobKeeper rules and regulations now, which are effective for pay starting 30th of March, you have to pay your staff for the 4 weeks of April in order to get paid or reimbursed the JobKeeper money in May. So you need to know what your cash flow is, because you need to know how you're going to be able to pay that over these next 4 or 5 weeks, in terms of exactly when they're paying it out, to then get the money back in again. So it's this whole exercise of, money going out before the money's coming in, and how are you going to manage that? As I say, for those businesses that have shut down with no income, unless they've got a stash of cash, a little, cookie jar with some money in it, how are they going to do it? And the government certainly came out and said, we can go to the bank and get funding. Yes, but how quickly are you going to get funding? Some of the state funding may help, may not help, may provide a bit, but not enough. Just all sorts of different levels. And even if you are in business, I was talking to a client this morning, in fact, and just got off the phone from them had to get off the phone in order to hop on here. I said, I got to go, because they've discussed with their staff reducing their pay. So they've gone back to their team members and said, guys, in order for us to continue, and we want to continue, we want not to lose you, we need each one of you to come back and say, what's the bare minimum you need every week to pay your bills at home. That's what we're going to pay you now. We will owe you the rest of your pay. So whatever the difference is between what you're getting, what you say you need now and what you should have been paid, we're going to keep a track of that. And when business gets back to normal, when we can, and possibly when JobKeeper money comes in, we will then pay you the difference. We'll pay you what you should have. And it's this whole exercise of how do we manage that from a cash flow perspective? How do we pay out what we need to in pays, wait for the money to come in? Then there's the cash boost, but cash boost for business in terms of the reduction in the PAYG withholding if you're eligible for that. And that's, again, you've got to lodge the BAS, but then you'll get the credit. That should be easier because it just means paying less. So that's a little bit easier. But again, what does that mean?
Maybe we could touch a little bit more on that, because I think that people are saying, well, how do I get that? Does that mean I get cash straight into my account? Or maybe what's the cash flow boost for business? And is it just a matter of if I'm employing people, I get that? How does that work?
Got to hand it to the federal government for naming things in a way that makes sense. So a cash boost is not cash. Go figure. Yeah. Anyway, so cash boost, is simply, if you have been paying employees, so you've got a business, you've got employees, it's a credit on your business activity statement for the PAYG withholding component up to a total of $50,000 in the March to June period. So there's some different calculations depending upon whether you're quarterly or monthly. I don't want to go into the nitty-gritty detail of that, but there's some detail there. So as long as you're paying wages and you've got PAYG withholding, you can get effectively a reduction in the amount you pay on your BAS. So instead of paying, with full amount, you're paying some amount less. So it's not a cash money in the bank account. On the other hand, the JobKeeper is. So the JobKeeper is money that is going to go straight into your bank account. It's not going, whilst administered by the ATO, it's not going into your income tax account to offset any outstanding tax liabilities you may have or pay off the BAS or anything. No, it's going to be real money in your business bank account so you can pay the wages or reimburse you for the wages. In a sense, one way of looking at it is saying, okay, I've got to fund my April wages. Then I'll get the money from the government to pay the JobKeeper, so that money will be there for me to pay May wages. Then you get, but it is being paid in
I really like it.
You got to get ahead.
I really like the comment you made about the example that you had of a client of yours. They're flexible in who they're paying by reducing only to what it is they need, but keeping track of what it is they're owed as a way to keep more people and then pay the difference down the track. That's not even I thought about that strategy. That's a very unique comment that you made there.
It is, and does it comply with all the fair work rules and awards and all that? I don't know, but they have made agreements with each particular staff member one-on-one, so they're kind of individual agreements with each one of them to help support the business through this time period. So I'm not necessarily saying that's a great idea because it may in fact contravene some other legislation.
Of course, but I think that the underlying issue there, or the underlying thing, is to help cash flow. It's talk to your staff. It's talk to people, get them involved. How can maybe they come to what do they need? Maybe some people are in better situations than others. And I know for the JobKeeper that just gone out, that it's actually not obviously the staff benefit and it can help you get them. But I know you can nominate yourself too. There's a director or a partnership or a sole trader. There's actually an underlying rule where one person can be nominated to also receive that too. That's right.
That's correct. So if you've got a company or a trust and you're not an employee yourself, then you can nominate, a person in that. And again, if you're a partnership or a sole trader, you can nominate, yourself or one of the partners to receive that JobKeeper. So yes, so for some people who aren't on a salary, that's an important one to be able to get that JobKeeper to help pay your bills. Because even if you're not drawing a salary as a solo operator, you're still drawing money out to pay your bills. So you're still pulling out money and drawings for yourself. So this is to help to fund that for you. So yes.
Yeah, I think that's a really important point, because a lot of people think, well, I'm not eligible, I don't have staff, or I'm not employing people. In fact, sole trader, partnership, even beneficiaries of trust can nominate themselves, can't they, for that? And I think that's a really good point to go and investigate, because we could essentially be leaving money on the table.
Correct.
Mm. And let's say, on that note, let's say there's I know, clients that I work with, husband and wife. Maybe one is a director of a small business, maybe the other is a sole trader, or maybe they're both involved in a trust, beneficiaries of a trust joint together. Essentially, if directors of companies, if sole traders, if beneficiaries of trust, if shareholders, if they all can be nominated, does that mean that essentially both husband and wife could nominate themselves for two different elements? Could nominate themselves as a partner or a director, and one could nominate themselves as a beneficiary of the trust?
It gets a little bit interesting there. So if you've got a husband and wife, say, who are running different businesses through different entities, and they pass the test of the businesses having dropped by 30%, I think each entity would be able to nominate one person. Where you come unstuck is if it's a trust that both husband and wife work in, you're only going to be able to nominate one, is my understanding of it at this stage. I haven't gone into a lot of detail on that, but my belief is you can only nominate one for a director for a company or a trust or a partnership or a sole trader. So if they're running separate businesses and they're separate entities, then they should be right to do it both. But if you've got a husband and wife working the same business, I think you're only up for getting one. Unless one's an employee, in which case you can, like if you're both employed, doesn't help a sole trader. If you're a company or a trust and your employees, then you would both be able to get it because you're both employees. So, yeah.
Yeah, great. So once again, guys, I'm just going to, just take a pause and again, any questions or comments? We've got a few comments come in, Amanda, which I'll get in a second. But just to kind of reiterate, this is a real-time topic. Now more than ever, you should be on top of this all the time. But if you feel that this is someone else should be hearing this or even getting this message, Amanda's going to be here for the next little while, obviously, to answer your questions and queries specific about your situation. We've only just started talking about this, and already there's some really gold nuggets given off. So if you know someone like this, please tag, and share this interview so that people can see it. And as always, let's bring in your questions and queries. So we've got a couple of come in. So first is this is just from Alison. It's actually just saying, she's just a compliment to you, Amanda. It's just saying, excited to learn something new today about cash flow, which is so important in your business and personal lives. Thanks, Dave and Amanda. We've got one from Atul. Atul, he says, hey there, awesome interview. Wanted to ask, can a Queensland business apply for small business disaster recovery grant?
If you're talking the state Queensland grants, I've not done any research into that. So whilst I've been talking about what we can get from a cash flow perspective on JobKeeper and the cash boost from the federal government, it's not actually my forte. That whole funding, what I've been looking at is what can we do from a cash flow perspective generally across business. So my thing is more around understanding how the money comes in and how it goes out. So from a state by state thing, I know I did do a little bit of look at New South Wales recently, and that was to do with pretty much businesses that have a physical presence, like a retail shop or restaurants, cafes, those types of things. There was some funding for them. I'm not sure what the Queensland rules and regulations are. Every state is different. I did see that Victoria also had something that someone made the comment it was very easy to apply for. So if you are eligible, it's a case of finding out what's out there. And I think, Dave, did you have someone else that's in the series? I think that perhaps is going to be able to go in more detail on what's available. So absolutely. I think, we might need to refer to that.
Absolutely. So even for a tool itself, there's lots of things out there. You know, you've got the SME scheme that has just been announced. You've also got every state. I know Queensland, if you're based in Queensland, you know they've got the concessional loan of up to 250,000 interest free over the first 12 months. New South Wales, Victoria, South Australia, Tasmania have got the $10,000 operational grant, which is up for. So it really comes down to a case by case, and it's about communication as well. It's going and having a call and just simply saying, are you eligible and are you continuing to go? It's if you're still operating and if you still got staff, that's the key to a lot of these grants. And that's the difference between a loan and a grant. You know, a grant is helping you through this time. Northern Territory has got an amazing one. It's called the Business Survival Fund, where they're actually giving money, not only for people who are surviving this time, they're actually got a one called Rapid Adaptation Payment, which is they're paying people to actually pivot and innovate, which is really interesting to see what they're doing there. So there's a lot. I guess the message would be that there's lots out there in order to go and get the resources of cash. It's just a matter of you doing the research and going out and seeing and picking up the phone and seeing if you actually are someone that actually are eligible for that. Right. But I think what we want to do in the topic of today is if you receive that windfall, if you do receive that cash, what do you actually do with it? And I think that's where Amanda's going to be best placed today.
Correct. That's it.
We've got one more question, Amanda, which is about finance, which I think is it's from Sam. Sam says, what are the most overlooked aspects of your finance that the average person could benefit from largely? So that's bringing it back to cash flow. So I guess what's the most mistakes or overlooked areas?
Okay, so I think there are two things that in a general market are overlooked. One is on the income side is making sure that invoicing is being done in a timely manner, that if you're not being paid when it's due, that you're following up and you've got a nice solid debt collection process in place, that you've set in place up front the rules of engagement in terms of, this is, it's a 14-day account or a 7-day account or whatever your terms are, and that it is to be paid, and this is what will happen if it isn't paid on time. So I think that's something right now, the key on any outstanding invoices is to look at who are they, what are they, get on the phone. It's not a case of emails anymore or automated stuff out of accounting systems, which work well usually. Now it's get on the phone, have a conversation. How are you going? What's happening? There is this bill outstanding. Where are you at the moment in terms of, because some businesses are still operating, like a lot of businesses are still operating, and there's no reason why they shouldn't be paying your bill if it's outstanding. There are others that are in crisis mode and won't be able to pay it now, but will acknowledge that they will when they start back up again down the track. So I think for now, from an income side, tracing in some of the outstandings. From the other side, which is the other thing that I think a lot of people get caught out on, although many people may already have been dealing with that now, is it's very easy for expenses to creep in and be paid. You don't really realise that you're paying them and you're not using them, particularly with monthly subscription type things that you've signed up for. And I'm going to use one I did ages ago. I signed up for Audible. I thought that would be great. Did I ever listen to anything? No. But I kept paying it thinking, I will. And at some point I eventually went, you know what, Amanda, get real about this. You're never going to listen to these things. Turn off the payment. Cancel it. So I think the other side of it is really delving into every single payment and go and ask the questions. Is it essential right now, particularly now? Is it essential? Is it absolutely essential that I have it? If it is, then that's fine. It stays. Is it something that I need, but perhaps I could find a less costly option? Fine. For example, some of the CRMs, I know I've used some in the past. They were quite expensive. And at some point I've gone, you know what? I'm not using all the bells and whistles. There's a cheaper version out there, and I've saved, I think I was paying $400 a month, and now I'm down to $75. So that sort of thing. If there's something there that you can change and find a cheaper way of getting the same result, now might be a good time to do that, particularly if you've got time on your hands or staff with time on their hands to do that. And then the third question is, yeah, if it's not necessary, we'll get rid of it, stop it, find a way to eliminate it. So what I tend to find with people generally is that, we usually can find a few $100s every month, just as a minimum, just doing a very general review. With business now, if you're in I think what's really key now, no matter what the state of your business is it's about conserving cash. It's about trying to minimize the amount of money that goes out as much as you possibly can and save as much money as you can, because when we get to recovery, which we need to start talking about, when we get to recovery, you're going to need money to get your business up and running again. So you don't want to be utilizing every dollar now if you're still operating and kind of go, oh, we'll be fine, because there's going to be money needed down the track. So I think they're the big ones, is just being really kind of ruthless on your expenses now. On if it's not necessary, get rid of it. And if you can cancel something because you're not using it now, like I was going to say a Zoom subscription, but I think Zoom subscriptions is probably the one thing you wouldn't cancel now. But if you've got something that you're not utilizing, if you can cancel it and not lose data and stuff, and then rejig it back up again and down the track, then let's save some money now. I mean, if it's $25 or $30 a month, amazing how quickly those add up.
I guess from really good points, and I trust, Sam, that was answering a lot of your questions. Before we get to, I think we'll talk very soon about the recovery aspect and maybe the transition through that. I think it's important to touch on right now is it simply, how do I understand my numbers if maybe that's something that I've maybe just not thought about before? Is it as simple as getting a list and just going incomings and outgoings, or is there other strategies or other tips that you is it a spreadsheet? What if I wanted to get a real grasp of my numbers now before transitioning through, what would be the best way to go about that if I'm a real novice at this?
Yeah, so it is about, spreadsheets work really well for this, I have to say. So becoming a little bit of a spreadsheet basic person is handy to have that knowledge. It's looking at what money is due in when, and what can you identify and expect to come in when, and planning that out a little bit. It's planning out the expenses. So looking at what are your fixed costs, what are the costs you're going to pay no matter what. Now, in the ordinary course, I'd say rent, but maybe you've negotiated no rent or perhaps a reduced rent. So whatever that reduced rent is, your staff wages, those types of things, and looking at when do they fall in the weeks of the month. So what I'm recommending right now is, rather than a month by month budget, cash flow forecast kind of exercise, is looking at it week by week. What have I got to pay this week, next week, the week after, and for a 12-week period. And then as each week progresses, kind of update it and move it forward another 2 weeks. So you always kind of it's got a kind of rolling 12-week period forecast. I think the week by week right now is absolutely vital. So having a spreadsheet that kind of says this is the amount of money that's due in, and whether it's from the government, a grant, whether it's a tax JobKeeper or a tax thing or whatever it is, whatever that money is coming in, what are the amounts you've got to pay out, and then what's your running bank balance. And part of that is then trying to siphon some money off to push some money aside if you can. Not everyone can at the moment.
It's a really good point. It's great. So guys, if there's any questions or queries, please make sure you get this time. We've got about 50 more minutes of Amanda's time. So if you really want something specific on your case, then please make sure that you get your chance to ask them. So let's start transitioning then. So if we've worked out, we've got a bit of an ins and outs, and we've got a bit more of an idea of what we've reduced using communication with, say, rent landlords and whatnot. What do you, in your case, what's the best way that we can transition then towards that recovery period? What's the best way we can maneuver using our cash flow through this time?
So this depends on whether or not you sell products or services. So if you're selling products, then what you may have been doing during this time period is kind of selling off your stock, but you're going to need to ramp your stock levels back up again, ready for when you open. And of course, one of the big challenges on that was a few of those. One is, when is that going to be? and how much notice are we going to have about when that's going to be? And the second thing is, if, like for a lot of businesses, those products are being imported from somewhere else out of Australia, you have that lead time between when you order it, get it delivered, pay for it. Some of them pay before it. It's like this is the whole payment. So you may have a need for money to go out the door to buy the product to have yourself ready for reopening or particularly retail type place, a retail operation, to be able to open the doors again. And that is a big, so looking at how you're going to fund that, restarting that back up again. I think the other thing about the restart, so if you're in a service-based business, is if you've, what have you done with staff? Do you still have your staff on? Are they, you're paying them your full rates? Are you paying JobKeeper rates? What does that kind of look like? But I think one of the big challenges that most people have not thought about in the restart, for many businesses, it's not going to be back to whatever your turnover sales were when we stopped. For some, it will. I think for some restaurants and cafes, I think, perhaps particularly the first month when we all kind of get out of our front doors and we're allowed to go out and catch
freedom!
Up with friends. I think, and freedom is there. I think, the restaurants and cafes could just be actually struggling in the nice way in having too many people. Everyone's there. They want to eat and drink and catch up with friends, and so they could actually go from nothing to back up here again very quickly.
Yeah, you went from busy to then handbrake to then back on the pedal again.
Correct. And one of the challenges with some of those, and he's actually the tenant of a client of mine, none of his staff were entitled to, they were all casuals, they hadn't worked for more than 12 months. He's not entitled to JobKeeper for any of them. So he's lost all his staff. So a big question for him is the day he gets to open again, how easy is it going to be for him to staff himself up with people that are, know his business and his systems, etc. So, but that aside, so that's another little issue. So I think there's some that will just go straight up through the roof very quickly. But I think for a lot of the rest of them, it's going to be a slow ride back up again. And so that means that whilst you might have had a team of 5 people, 10 people, I don't know, whatever the numbers are, it may be you've only got enough work for 2 or 3 to start with. And how are you going to manage that and hopefully hang on to your team so that when it does get full on, that you've got your 10 people that are, good, solid workers that know your system, you had a good business. So I think there's the challenge moving forward then of, for some businesses, it's going to be like they're in startup mode again. And it's going to have to be, you've got to get out there, do the marketing and slowly build the income back up again. And it's not going to be a, tap turn on again. And that worries me because I don't think a lot of people have thought too hard about what that's going to look like and how long it might take. Who knows? And every business will be different as well. Like none is ever the same, but in this scenario, it's going to be a different kind of business to ramp that back up again. So I think that's a challenge. So that is a challenge then, not only on kind of what's that look like, but then what's the cash flow look like? You've now got, JobKeeper stops whenever it stops. I mean, it's got a drop dead date on it at the moment of September, but, if they might extend it, let's assume it does, stops then. That's fine. But now you've got to decide, can you afford to keep your staff on without that JobKeeper support?
And I think as well, we had a person come on that was talking about HR and the cost of not being too hasty and making drastic decisions over letting your people go because of how much that can potentially cost in letting them go. But there's also here, if this thing restarts, it's the same thing. How much is it going to cost you if you bring everyone back at once and potentially not have the same demand for your service or business? So I guess it's having that whole mindset in about, well, these decisions are really important to really plan this out, is that when this restarts, particular to your business, what is that really going to look like? And do you have a kind of on-ramp to actually get things back up going to the speed?
And that's exactly why if you can is that me with, I don't know, we got this funny noise in my ears. I hope it's not on the recording here what's going on. But that's the challenge then is what's that doing from a cash flow? And that's why I'm saying if you have the ability to stash cash or to find ways to save money now, it might help you and save you down the track, because you're going to need money to get yourself back up again.
Mm-hmm.
In most cases.
Yeah, absolutely. And if you're in a business right now that's going to not, like the way that your business operated before COVID-19 to the way your business is going to look post COVID-19, if you're realizing now, I think businesses and sole traders and solopreneurs and employees for that matter are probably finding even employees are probably going to be starting back in a job that might necessarily be the same role that they once had because the business has repositioned or repivoted. But even, I guess we're talking here maybe to business owners, sole traders, people that what they used to do. And what they did before might be slightly different to what they've got going on. Some businesses will probably kickstart and offer the same sort of business they did, like restaurants and cafes, even though that they've really pivoted to home delivery and drive-through right now. They will have more of a, they kind of go back to the way they used to be. But what would you say to a business owner right now that's maybe looking at it? I don't think that I'm going to be offering the same service, or maybe I have to completely reposition, or maybe even completely go and do something different. If they've got the cash flow right now, what's maybe some of the strategies or some of the things they should be looking at in order to use? Should be using that cash flow just to hibernate and survive? Or should they maybe using some of that cash flow to try and invest in trying to reposition and reinvent themselves so that they can come out of this the other side?
Definitely. And I think if you've got some cash flow, and that's the big question, if you've got some funding and you are looking at what does your business look like, now is the time to be reimagining your business, to be reinventing it into what it looks like and working out what does that mean. And if that means potentially in the short term doing some training or doing some development, creating online programs, creating, writing books, I don't know, various different things that people can do. It's make the use of that time now. If you're not fully operational and busy, make the use of the time, and even if you are, find some time to plan what it's going to look like, and therefore partly maybe whether or not ultimately you keep on the team you have, or whether you need to start looking for different types of people. And I think one of the other things we're going to potentially see coming out the other end is that for some people, the experience of working from home is going to be, I like this. I don't really want to have to spend that hour or so commute each way to get into work, and I want to work from home. I'll come in. I'd like to go into the office maybe once a week or once a fortnight, I don't know, a couple of days a week, but I want to work from home the other days. There will be other people who are going, oh God, get me out of here. I can't stand it. They've been working off their bed for the last however many long weeks it's going to be. Don't have space for work. And I've got kids and family, and I just need to get out of here. I want to go to work again. But I think it's going to change the way the workplaces look. So thinking about what's that do for you? If you've now got a team that's kind of happy working dispersed and it's kind of working, do you really need that office premise or the business premise? If you're, particularly service industries with offices, do you really need that? What's that look like? And even for some of the retail, those ones that have gone online now, are you going to go back into that retail operation, or are you going to actually go, you know what, we can do this. It's more profitable. It's better cash flow, more return for me doing it this way and building this online business up than it is for me to do the old kind of bricks and mortar type business. So I think it's a big shift, and it's all about looking at what it looks like, planning for what that is, so that you can make the decisions on the cash flow now, where your money is being spent that you do have, to get yourself positioned and ready. And if that means, rebranding, remarketing, new copy, new website, things like that, if you're going to change direction significantly, then there's certainly those guys are be happy to be working now, and working on getting that kind of work done. That definitely part of the exercise. Definitely, I think I'm finding, as I say, there's a big difference between those that have work and kind of those that haven't got work, and those that haven't got work have got this wonderful opportunity to completely rethink what their future is going to look like. The downside of that is they've got no money coming in, so it's a stressful side. Those that are working are looking, going, oh, it's going to be different out the other end. I've got to make time to work out what that looks like. I've got to figure out what it is on top of doing my normal work or managing my business and my dispersed team and whatever that looks like. So it's as to say, there's a bit of a to me, a bit of a social divide between those that are working and those that aren't working at this point.
I think you made a really good point about, when we go to restarting this, that if you can extend the benefits, because there has been some real positives of working from home. People are realizing that they can function, or they've found a way to do that. And business owners might even realize that, yes, we may start back with maybe a less of an operational or less of a sales volume. But if you can actually cut back on some of the expenses, you might actually be, if you look at your ingoings and outgoings, if you can reduce the expenses, even though that the income might be reduced, it's still the margin. If your expenses are high, but you're making lots of money, well, your margin still might be as poor as someone who's running a real tight ship. So if you restart, I think one of the great things that I've got from you is right now is thinking about when you restart is, can you actually keep the momentum of the work from home? Can you reduce some of the expenses that when you restart, if your bills were 5,000 and you can reduce them down to 2,500, well, there's a 2,500 margin that you've got back, and you might even find that your margins could be the same, if not greater, even though operationally actually being operating at the level that you could be at. And if you can get your operations back to where it once was, well, then your margins are greater, which means you actually end up making more money for what you were doing just before as the past.
Correct. Absolutely. Yeah. And that's that's the sort of stuff I love. I love getting involved in those kind of what if scenarios of, what if we did this and what if we did that, and what if we basically all worked from home and we just had a serviced office that we had access to, for a meeting room once a week or something. What would that cost, and how would that look? I think business is going to be different coming out the other side, and we all have the ability to decide how different our business is going to be, in conjunction with the team, potentially. But that's something, it's worth having a conversation with a team even in this next period of time, saying, okay, how is everyone finding it about, going, what was your thoughts now, when we return to work? Would you be happy to continue to work from home? And maybe it's a one-on-one with each employee rather than a group, and just get a feel from each one of them as to whether or not they're going, what, I'd be happy doing it all the time, or or no, I don't, or a bit of both, and just start to kind of see how that might change the way things operate. What are the challenges that we currently have that we would need to overcome to really make it work long term? Phones can be an issue at the moment. I know I've got a few clients, people I know of, a couple of mates of mine who are employees. They're saying it's fine working from home, but the phone stuff's not working, and I'm now using my mobile phone to phone people because the phone system doesn't work. So there's some technical things that a few people probably still have to work out to make it work long term. But but there's some savings in there for sure.
Yeah, absolutely, and I think there is. And the kind of last point I wanted to kind of make before maybe giving you an opportunity to kind of wrap up the kind of key messaging that you can bring based on what we've spoken about today is, there is, I know we haven't spoken about what options are out there, because this is more of a what do you do when you receive that cash flow. So whether it's a grant, whether it's a loan that you receive, whether it's the job keeper, whether it's access to your superannuation, whatever options, then there's plenty of options out there. I do believe that regardless of your scenario, there is an option there for you to obviously get some support and some cash. And what I'm finding in the past is I've been working with businesses that are very activity based, meaning that they've got a lot of people in it and there's a lot of stuff. And how they spend that cash flow is exactly like the sand through the fingers, where they pick something up, but it just dissipates through the fingers, and there's not much left at the end of it, nothing to show for it. And it's about, essentially using that cash flow to actually have something to show for it, like a house. Yes, you can, it's all like getting the return on investment greater than the interest you pay on it versus, spending money on things that isn't really much to show. I would say that, there's a lot of business owners right now that go, oh, I wish I had the time to build that website, or I wish I had the time to do this, or I wish I had the time to do that. I wish I had the time to reposition my bricks and mortar retail store in the way it's presented. Well, there's now probably more than ever time to actually do that. Would you agree that if whatever windfall that they get or whatever support that they are getting, it's important to have that conversation around, well, am I spending my money on stuff? In other words, I have a big to-do list as opposed to having a to-build list that's actually going to help me leverage off the future and so forth. Is this an important conversation to have about transitioning from, well, how I use my cash flow and what I spend my money on versus the now versus the future? Have you got anything to share on the usage of that?
Yeah, absolutely. No, perfectly spot on. And it comes in line with kind of looking at, well, where's the money going now and what can I cut out? Kind of then also the corollary of that is, well, what do I need to be doing for the future, which is kind of what we talked about a little bit earlier on the repositioning for the future in terms of what's that cash flow look like? What do you need to do? Is it a case of, and I think for some people, they've got time on their hands and that's great. But the big question is, do they have the money if they need to be employing other contractors or other consultants to do things? Do they have the funds to do that? But I mean, I know with a couple of my clients, they're looking at the JobKeeper and going, yeah, that's great. But the reality is we've got enough income coming in to pay the staff anyway. Like our income is down, but we've got enough. So the JobKeeper can be, whilst it's there to pay the wages, but the money we've saved on paying the wages because the JobKeeper's paid it, we can then utilise to, rebuild what the future looks like and reinvest back into what the future looks like. So I think, definitely some of that funding, it is about what's there for the long run and very much planning for, well, what if we did this? What if we did that? And how does, what are the costs relating to that? What's income? What's that going to look like? Definitely part of that process.
So if I've been listening at some point, either to the replay or even been live at some point today, and I want to actually get some support, I'm thinking, you know what, I need to know my numbers a bit more. This is the stuff that you do with your clients on a daily basis, isn't it?
Yes.
Yeah. So if they wanted to get in contact with you, or if they wanted to, I know you've written a book, if they wanted to buy that, or if they wanted to download that, what's some of if they wanted to get in touch with you, how could they do that?
Okay, so I've actually written 3 books, and the 4th one's about to be published. But the one that's relevant to this is the Unscramble Your Numbers book, which is kind of relevant to our conversation today. But there's a lot of free information that's readily available on my website, my blog posts. I've got a podcast, various videos, etc. AmandaFisher.com.au, super easy. Information's on there. Contact me easily through that as well. Happy to help. I've got a course on cash flow management that I'm about to release. What's the date now? In about 7 days. So anyway, next week sometime it's about to release as well, which goes in a lot more detail of what we discussed today. So if you're interested in that, absolutely make contact with me. Or email me, amanda@amandafisher.com.au. Also easy.
Right. Well, guys, there's some plenty of resources there. You've got some free checklists. You've got the book that you could potentially get off Amanda. You could get in contact with her directly through, obviously, websites, etc. And then there's also this course that's obviously going to be coming out, which might be quite timely if you want to get your hands on. So lots of resources there. AmandaFisher.com.au is where you need to go in order to make contact with Amanda and to be able to get any resources that you need right now. So, guys, we are going to be wrapping up and getting Amanda just to wrap up some of the key messages and takeaways. If you have got any specific questions that are maybe relevant to you that you would like, take the opportunity right now to ask them. Otherwise, we've probably only got a couple of minutes left. So really today, Amanda, it's been fantastic. You know, we've had a conversation around really how to understand your numbers, you know, why it's important right now, and also to think about, you know, how this thing is going to look like on the other side. You know, if you could, what has been some of the key messaging that if you could sum up the conversation today and so maybe a couple of 2 or 3 takeaway points that people could really go away, what would they be?
I think the first thing is to really look at how much you need to be spending now, and whether there's any expenses, whether business or personal, that you can just eliminate for the moment. Doesn't mean you don't rejig them up later. The second thing is to look at obviously what your options are for funding coming in and what the timing of that. So start looking at putting together perhaps a 12-week process of what money's coming in, what money's going out, so you've got an idea of what's coming up. And start to be thinking about what that's going to look like when business the day we're allowed to open for business again. What's that going to look like? And just be conscious that perhaps it's not going to be an instantaneous back into where it was, and you may have a slow kind of accumulation back up again. And does that mean you need to be looking at some more marketing, some more conversations? Maybe it's conversations you need to have now so that you're ready for when it comes out, but start planning for that future and looking at that. And I think, you know, my bottom line is always, at the end of the day, you need to be looking at the numbers, because you need to make your numbers count.
Yes. Amanda, that's been some fantastic advice and some great takeaway points that I think people can really utilize. Thank you so much for giving us this time today and serving the community. Once again, if you want to action any of those key takeaways that Amanda has provided today, it's amandafisher.com.au. There's plenty to choose from a book, resources, even making personal contact with Amanda. And there's also a course that she's creating. It's coming out real soon, that it's going to really help you unscramble your numbers even more than what they are right now. So guys, we'll sign off on this. Amanda, thank you very much for spending the time with us today.
Thank you very much for having me, David. I really appreciate it.
It was great. And for everyone else, this was episode 3, all about cash flow in the business reinvention series. Stay tuned. We do have the very next episode coming out, and the whole series is simply helping you, you know, refocus your clients, you know, reposition your brand and reinvent yourself through this time. So guys, I trust that you found today valuable. Thanks again to Amanda, and we look forward to connecting again, obviously, on the next episode of the business reinvention series.
Excellent.